Okay, hi everyone. Welcome to our webinar today. Hi Jacob, hi Philip, hi Rich, hi Kaylee, hi Zita, hi Glenn. Before I continue, I just want to check if everyone can hear me. Can you guys let me know in the chat box if you can hear me and if you can see my screen? Oh, sorry, wrong screen. Hold on. Let me change the screen over. Okay. Oops. Okay. Morning, Rich. Oh no, what happened to my questions? Can everyone hear me loud and clear? Hi Rich, hi Glenn, hi Kaylee, hi Baku. Okay, I'm glad everyone can hear me. I'm gonna start the webinar now. Okay, before I start the webinar, I just want to let you guys know that any opinion expressed in this presentation and on the following slides are solely those of my opinion, and it's not necessarily those of Vantage FX. So Vantage does not guarantee the accuracy or reliability of the information provided. Okay, so just be cautious. Everything I'm sharing here is how I became a profitable trader. And you guys should know that trading FX and CFDs carries significant risk, especially trading on margin. It's very risky. So if you're going to do it, please take it very cautious and please use proper risk management and please use proper techniques to do your trades. Okay, is everyone in agreement? If you guys are in agreement, please type something in the chat box. Okay, good. Thanks, Rich. Thank you, Brendan. Thank you, Jacob. Okay, I'm sorry. I know I sound a little husky today. I'm having a sore throat, so thanks, Glenn. Hi, Yubaraj. Nice to see you too. Okay, all right. I'm gonna start the presentation. I hope those are who are attending the webinar knows our topic for today. So we're gonna cover Fibonacci series. We're gonna start our Fibonacci series. You guys requested this topic. We're gonna do part 1 of part 4 today. We're gonna focus on retracement, so Fibonacci retracement. So before I continue, I just want to find out how familiar you guys are with Fibonacci so that I know whether I should go faster or slower, and if there are beginners in the crowd or are there a lot of professionals here. Can you guys just let me know in the chat box, like how versed are you guys on a scale of 1 to 10? Like how well do you know Fibonacci retracement, or actually Fibonacci at all for that matter? Okay, I've got some response coming in. Not used it, but have seen used it, understand it pretty well. I've got someone saying they're beginner, use it very often. I'm a beginner, however, I have been looking into it lately, so I know basics. Beginner, okay, I'm guessing there are more beginners here than like people who are very versed with this. I'm trying to focus on gold and GBP, JPY. Yep, we can look into charts later on after the topic. So what I usually do is we're gonna go through the topics first and then we'll move into the charts. I'm a beginner, so trying to understand it. Okay, beginner. Okay, I'm gonna say majority of the attendees today are beginners in this topic, so I will go slow. If you guys need me to repeat anything, just let me know in the chat box. If you guys have any questions, you can drop the questions at any time and I'll try my best to answer them. All right, let's start our topic. I do still see a lot of people joining. Should we give them maybe a minute or two? so that more people can join, because I do see a lot of people still joining the room webinar. We'll just give them a minute to settle in. Hey Edwin, hey Brendan, hey Edith, sorry. Hi Helena, welcome back. Hey Philip, hi Wilfred. Okay, quick question while we are waiting. Hi. Okay, shoot, Kaylee. If you have a question, just drop them anytime and I'll try my best to answer. Do you know if Vantage has a free Telegram group? Vantage does have a free Telegram group. Let me find out how to join. It's called Vantage HMC chat. So there's two chats. One is Vantage HMC. That one has 2,000 people in there. So I'm guessing the one with 2,000 people is the one where they broadcast where like the webinars are coming and whatnot. But the Vantage HMC chat is where people are discussing about trades and all. I see a lot of people like posting about charts, and I think you get to interact in this chat. So if you guys want to join that, maybe search for Vantage HMC chat in Telegram, and then you will be able to join. Okay. Morning, Edith. Okay, I think everyone settled in. I think everyone who's supposed to join today is already in, because I don't see more people joining. So I'm just gonna move on. So our agenda for today, as usual, is we're gonna start with meeting the team. So I'm gonna introduce you guys to the team that's taking care of you guys, and then we're gonna follow up with Fibonacci retracement, and then unconventional Fib ratios, and then we're gonna go into live examples. So more importantly, we're gonna focus on what is Fibonacci retracement, the important Fibonacci retracement ratios, ideal market structure, and intensive practice session. So when we do the intensive practice session, we're going to move on to the live charts on TradingView, and then we're going to practice so that when you guys, like after this webinar, you guys can practice on your own as well. Okay, all right. So let's meet the team. A little bit of where we are from. We're from Singapore. We're an award-winning research team. We're the finalists for technical analysis 2019, 2022, and 2021 for best Forex and best equity research. So we're a certified Singapore fintech company. We do a lot of presentations on like radio, on TV, and we do a lot of podcasts. Sometimes we do podcasts as well. So our team consists of Desmond, which is our CEO, and Kaylin, she's not here anymore. Sorry, the slides are not updated. She just left last week. So I see a lot of regular names today, and you guys would have attended Kaylin's webinar, and you guys would have known that Kaylin has already left. And then we have Angelina, and then there's me. So those who are not familiar with who I am, my name is Cassandra. You can call me Cass. I am an investment analyst at Everest Fortune Group. I am a profitable trader. I'm managing close to $1 million right now. So I've passed FTMO twice, and my specialty is identifying reversals through combinations and supply and demand and Fibonacci confluences. So I'm really good at catching reversals. So those who are here for the first time, I hope you guys you guys get to bring something useful back into your own strategies, and you guys will be able to implement whatever I teach you guys today into your own trading strategies and hopefully become profitable and then see your account grow. Okay, so that's that. Let's start with the topic proper. Our topic for today, which is Fibonacci. We're gonna understand a little bit about Fibonacci first before I can start with the Fibonacci series. So Fibonacci, it was founded by this guy. Well, it's not really founded. There was this guy called Leonardo Fibonacci. He was known as the greatest European mathematician of the Middle Ages. So he was one of the first people to introduce the Hindu-Arabic numeric system into Europe. People were using Roman numerals before this, and then he was the one who introduced that numeric system into Europe. So his new number system actually allowed easier calculations and created the famous Fibonacci series. Okay, so the Fibonacci series, or the sequence, goes by 1, 2, 3, 5, 8, 13, 21, 34, 55, 89. I know it looks confusing, but it's actually 1 plus 1 is 2 and 1 plus 2 is 3. Let me just grab out my pen. 1 plus 1 is 2, and then 1 plus 2 is 3. 2 plus 3 is 5, so 3 plus 5 is 8. So it's a sequence. You add the number before it with the current number, and it will give you the next sequence. So the first thing we notice about this series is that each number is the sum of the previous two numbers, like I was saying. So 8 plus 13 equals 21, and then 13 plus 21 equals 34. So I mean, that's what it goes on. But the next thing we notice is that if we divide any two numbers next to each other, we find that they are connected through the same ratio. Okay, I know you guys must be sitting there wondering, why are we learning about mathematics? But it's just a brief history. Ultimately, it doesn't really affect your trading. It's just good to know. So now with the Fibonacci number on top, we will be taking 377 divided by 233. We'll get 1.618. So 1.618 is actually a golden ratio in the Fibonacci series. Okay, so if we inverse it, it becomes 0.618. Okay, again, guys, whatever I'm telling you guys about the history about Fibonacci is not as important when it comes to trading and applying it to your trading method. More importantly, you would need to know how to actually apply Fibonacci into your trading strategy. Because, I mean, you can know all the history about it, but if you don't know how to apply it into your trading, ultimately, you won't be getting the results you want. So let's try another pair. Let's say we get 233 divided by 144. You will ultimately always end up with 1.618 or 0.618, or you will either you end up with 1.618. So this sequence always ends up with 1.618. Okay. Yeah. So this is the examples of how dividing the number before it will give you the same exact answers. It's either 1.618 or 0.618. Okay, we'll just move on from here. So a lot of people say, actually Fibonacci, the Leonardo Fibonacci himself was saying, Fibonacci is a nature. Everything is in the golden ratio. We see it in the galaxy, flowers, vines, hurricanes, seashells. We see it in art. We see it in architecture, and now in the most of brands that you see, they need to be aesthetically pleasing, so they follow these ratios. So Fibonacci is just a series and a pattern. If you guys are really interested in this topic, after this webinar, you guys can go in depth and Google more about it. But today I'm just going to touch on the surface of the Fibonacci history. So now that we know this secret, it gets a little crazy seeing it everywhere. So if Fibonacci ratio is in all of nature, don't you think humans as part of nature, as a collective consciousness, would be affected by the levels, and only place we can quantify it is in the markets? So where our fears, joy, and greed and indecisiveness is all displayed on the charts, we can use Fibonacci to try to narrow down what we think is going to happen next in the market. Okay, yeah, look at that. It will just give you the same sequence. That's just Fibonacci and everything. Just Fibonacci and everything. Okay, so now that we have a rough idea about the history of Fibonacci and what Fibonacci looks like, we can look at some of the unconventional ratios in Fibonacci. So this is what applying Fibonacci on the charts will look like. You will have, before you apply Fibonacci, you first need to identify patterns. Because today our topic is Fibonacci retracement, I need to let you guys know what Fibonacci retracement looks like on the chart. So it looks like a V with the back end being shorter than the front end. So when you draw a V, this is the starting point, it is 100, and this is 0, okay, for example. So, oh, sorry, I'm just gonna erase this. This is 100 and this is 0, okay? If you guys are a little confused, don't worry. When we go into the charts later, it will make more sense. Okay, so when we see a V pattern on the charts, like this, for example, and let me look for more V patterns like here. Like here. No, that's not a V pattern with a shorter end. Anyways, what you want to do when you're charting is you want to look for a V pattern on the chart, and then you're going to plot it from the swing high to the swing low. Okay, we're going to use the Fibonacci tool later when we go into the live charts, and then we're going to plot here, and then a lot of like levels will come out. So I'm just going to tell you guys this theoretically, but later on the charts we will see how it works. Okay, so if anything you guys want to take away from this webinar, from today's webinar, let me just erase everything. You just need to remember that with Fibonacci retracement, there are 5 levels, okay? There are 5 levels. The first level is a 23.6%. You guys can write this down if you want. 32.8%. Oh, just give me a sec. There is the 50% level, the 61.8 level, and the 78.6 level. Okay, so you guys just need to remember these 5 levels. These are the 5 levels that are important in Fibonacci retracement. It's a level from 0 to 100%. There are 5 levels in Fibonacci retracement, and the 5 levels are between 0 to 100%. Next week, when you guys join me for Fibonacci extension, and then the week after when we do Fibonacci expansion, you guys will see levels that are below 0% and above 100%. Okay? Okay, wait, just give me a sec. I think my colleague Angie thought that she was supposed to take you guys today, but I'm supposed to take you guys today because I'm sick, so I'm down with the cold, so she thought she was supposed to cover me. So let me just let her know that I'm already taking you guys for this webinar. Okay, remember these levels, okay, because I will be testing you guys in a bit. These are not important. Let's just go straight to the live chart so that we would be able to use this later. Okay, so let me just get rid of this. Oops, sorry. Oh no, something's wrong. Okay. Can I just check if everyone can see my charts? Can you guys see my charts, or is it like stuck for some of you? Okay, that's a no. Let me. Okay, can you guys see my charts now? Okay, nice. I do remember someone saying that there was a particular pair that they were focusing on, so we can try to analyze that together. It was Kaylee. Kaylee was talking about gold and GBP JPY. So we can look at GBP JPY. We can look at GBP JPY and gold in a while, so everyone can see my charts, right? We're gonna try to identify Fibonacci retracement on the charts. Let's get rid of everything so that the chart is clearer. Okay, just remember that when you are identifying Fibonacci retracement, it looks like a V with a shorter end. But you can the V can also be inversely. So it can also look something like this. As long as it's a V inversely or not, but this end, the second part of the V needs to be shorter than the first part. So it cannot pass 0 or 100. It needs to be within 0 or 100. It needs to be within this range. Okay, all good. Okay, just one look from the charts. I do already see a Fibonacci retracement. Can you guys just let me know in the chat box if you see it as well? No? No one seeing it? Is it the last short? Okay. No, I've got a few no's coming in. Okay. So remember I said identify the V. There is a V right here. Do you see the V? Don't really understand. Okay, that's okay. Do you guys see the V? As long as we're assuming that 0 starts from here and 100 starts from here, okay? So as long as this second part of the V is within the 0 to 100, that is considered a Fibonacci retracement. Okay, so let's just go. I was gonna go straight into charting, but I think because there are a lot of beginners here today, we can go straight. I think we should train our eyes to be able to identify the V first. We should train our eyes to be able to identify the patterns, because in trading, it's a lot about identifying patterns, and it's a lot about catching things that a lot of people cannot see. Okay, so let's just remove everything, and then we can start by going to other charts. Kaylee, I know you said you wanted to look at gold and GBP, JPY, but I think at this point of time, we should be focusing on training our eyes to be able to catch the retracement first. So let's go to gold, XAU USD, and see if we can find a retracement there. Okay, one look, do you guys see the Fibonacci retracement? I do see a Fibonacci retracement. It's not very obvious. So if you're a beginner, you would not be able to spot the Fibonacci retracement. But it is there. Do you guys see it? Can you guys let me know in the chat box if you see the Fibonacci retracement? Okay, nope. A lot of no's coming in. Harana is yes. Yes for Jacob. Although there are some yeses here, I do see more no's than yeses. Okay, so the Fibonacci retracement is here. I know it doesn't look like a V, but it doesn't look like a V, but the whole point is being able to draw something like this, as long as this second line does not cross this first line, that's a Fibonacci retracement. You guys see it now? Okay. You guys see it now. Okay, let's go to like more charts so that we can try to identify more, because ultimately I want you guys to be able to spot the Fibonacci retracement with or without these webinars. Like on your own, you should be able to spot the Fibonacci retracements. Okay, I'll give you an example of what is not a Fibonacci retracement. This is not a Fibonacci retracement because this back end is longer than the first end. So this is called a Fibonacci extension, which we will be learning next week. This week we're learning retracements, which does not allow the back part to pass the first part. So Harana is saying EUR/USD. I'm assuming you mean there is a Fibonacci retracement there. Okay, actually this is a good example. I just want to let you guys see this V, right? It's a complete move. This is not a Fibonacci retracement, okay? Like I said, the Fibonacci retracement needs to be below. It cannot cross either end of the first line that you drew. Okay, so this is not a Fibonacci retracement, but let's see like on a different time frame. Do you guys see a Fibonacci retracement? I actually see one. You guys see it? If you see, can you guys let me know in the chat box so I know if you guys, your eyes are catching it? I actually lost my chat box. I don't know where my chat box went to. Oh my gosh, where did my chat box go to? No, I don't know if you guys are responding to me. I moved my chat box and now it disappeared. Hold on guys, give me a sec to find the chat box. Okay, I found it. Okay, I do still see some people saying yes and some people saying no. There is a Fibonacci retracement here. It's very tiny, but it's there. Okay, there was one here as well. I mean, let's assume that this has not happened yet. Let's use the playback tool. Let's assume this has not happened yet. This would be a Fibonacci retracement. Okay. Okay, so now that we've gone through a few examples, I just want to check if you guys want to go through more examples or I can move on to the next part of Fibonacci retracement. Maybe we can find, do you guys want to move on already or should we find like few more examples of Fibonacci retracements? Can you guys let me know in the chat box? Because ultimately it's you guys who, I don't know if you guys want the practice or not. Okay, I've got answers coming in. You can move on. And then some are asking for more examples. More examples. Okay, I'm sorry guys. We will be looking at more examples because there are more requests on more examples. Okay, let's just look at the smaller time frame. Okay, do you guys see the Fibonacci retracement in this example? Okay, let's move on. Might understand better. Okay, you know what? Because it's kind of like half wants to move on and half wants to look at more example. Let's just look at maybe 3 more and then we can move on. And I'll just like quickly give you guys the answers. Okay, there's a Fibonacci retracement here. Let's look at another time frame. There's a Fibonacci retracement here. There would have been a Fibonacci retracement here. So on the smaller scale, this is a Fibonacci retracement. But if we're looking on a bigger scale, this is also a Fibonacci retracement. You guys see that? Okay, let's look at another time frame. This is a Fibonacci retracement as well. On the bigger time frame, yeah, that's a Fibonacci retracement. That's a Fibonacci retracement. Let's see on the weekly. Even on the weekly, there's a Fibonacci retracement. Like this is the V. Okay. Okay. So basically, for the Fibonacci retracement, you just need to find a V, like the sharp end, this V. You need to find a swing low and a swing high, and this end cannot pass the first one. It will take a while before you will be able to identify all of it, but eventually you will be able to identify all the Fibonacci retracements. Okay. So let's use this example. After you have found the Fibonacci retracement, now what you want to do is go here. You see these 4 lines, 1, 2, 3, 4 lines. It says Fib retracement. You want to press on the Fib retracement and you want to press on Fibonacci retracement too. Should I look at the most recent patterns? Yes, Jacob, you should look at the most recent patterns because things that happened in the past is not important anymore. It is the recent one. So why you're looking at the most recent patterns is because you want to predict where price is going. Okay, so once price has made a swing high, from here it has made a reversal. You want to predict where price is going to reverse to. Okay, so now that we have identified the V, the Fibonacci retracement, what we're going to do now is try to predict where price is going to go to. Okay, so once we have identified the V, if it's easier for you guys, you can use the brush as well to try to identify the V. Then now you go to this part, the Fib retracement or alternate plus F. Okay, click on this, go to the lowest point of that V that you drew, the lowest swing, the swing low, and you drag this tool to the highest point that you see. Okay, drag it to the highest point that you see. Okay, is everyone good with this? Okay, you guys let me know in the chat box, is everyone okay or should I repeat myself? Okay, all good. Okay, from the swing low, you're gonna pull this to the swing high. Okay, and then now you're gonna go into the settings. Okay, now I want to test if you guys were paying attention. How many levels for Fibonacci retracement do we have? Thank you. Okay, thank you. Okay, I'm glad you guys are paying attention. Okay, thank you, Rich. Thank you, Izita. Thank you, Harana, Baku, Jacob, Glenn. Thank you. Okay, and then now I want to know what are the 5 levels that we talked about earlier on. Can you guys let me know the 5 Fibonacci retracement levels that I mentioned earlier on in the webinar? Okay, thank you, Harana. Okay, so Harana is right, Rich is right. The 5 levels are 23.6, 23.6. So what you're going to do is go into the settings, click 23.6. Then you're going to click 38.2. Oh, sorry, did I write 32.8? I actually meant 38.2. 38.2. Sorry, it's not 32.8, it's 38.2. Okay, so it's 38.2, the 50%, the 61.8, and then the 78.6. Okay, so these are the 5 levels that you're gonna select when you go to the settings. You're gonna click OK, and then now you're gonna go back to the charts, and then you're gonna eliminate the one that is not relevant to you. You're gonna eliminate the levels that are not relevant to you. Okay, so just from the charts, can you guys let me know which level do you think is most relevant to current price? So current price is here. Which level is closest to current price? Okay, thank you, Harana. Anyone else other than Harana? Okay, we've got a few answers coming in saying 61.8, 78.6, 61.8, 61.8. We've got a lot of 61.8 coming in. We got a few 78.6. Okay. One thing is for sure, since everyone is in agreement that is 61.8 and 78.6, we'll go back to the settings. We're going to go back to the settings. We're going to get rid of the levels that we think is not relevant. So we're going to get rid of the 23.6, we're going to get rid of the 38.2, and we're going to get rid of the 50%. Okay, so we're going to get rid of that. I'm gonna leave the 61.8 and the 78.6 because these are the two answers you guys are giving me, but I will tell you guys the correct answer in a while. Okay, so the purpose of Fibonacci retracement is to predict where price is going, right? So, okay, I'm sorry, I'm gonna come up with all that 5 levels again. So let's say price is right here. Let's say price is here, for example, okay? So price is here. Price has just made the reversal. Price has come up. It has just made the reversal, right? You enter here for a sell. So you're gonna enter here for a sell because you're predicting that price is making a reversal for the downside, okay? So your next question is, if I am going to sell from point A, where do I get out? Where is my take profit? And that is why you use Fibonacci retracement to forecast where you think price is going to go to. And that is going to be your take profit. Okay, so it can possibly be here, 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 or here, right? Because there's 5 levels. You're going to predict one of the 5 levels that it's going to go to. Okay, so based on where current price is, because these are 5 possible levels that price is going to go to, based on what happened, let's just go max, okay? Based on what happened, price already passed this 23.6 level. So this 23.6 level is not relevant anymore, okay? So it went down, it passed 38.2 level, it broke the 38.2 level, it went to 50%, it broke the 50%, it went to 61.8%, and then it broke the 61.8%. So therefore, the 61.8% level is actually not relevant anymore because price has already broken it. So the next level, the only relevant level right now that is left is actually the 78.6%. Okay, so the correct answer is 78.6%. Is that clear? Do you guys want me to repeat myself? Do you guys understand why the 61.8% is not? So the point is where in the end level of short, meaning it will reverse there. Yes. Okay. Okay, we've got a few people saying that it's clear, a few people saying that it's not clear. Okay. I'm gonna remove everything again, okay? Let's just go back in the past. Okay. Let's say you entered here for a sell. Okay. You're entering here for a sell because you forecasted that price is going to drop from here, right? Okay, now your next question is, where do you place your take profit? Right? Your next question is, where do you place your take profit? That is when you use the Fibonacci retracement tool to predict where you're gonna take profit. So from the swing low, you're gonna pull it to the swing high. Okay, so now you have 5 possible take profit zones. 1, 2, 3, 4, and 5. Okay, so these are your 5 possible take profit zones. Okay, are we clear with this so far? Are we clear? For those who said that it wasn't clear earlier on, are you guys clear now? Okay, all good. Kaylee? Baku? Okay, Baku is good. Glenn? Kaylee, are you good with what I'm saying so far? Okay. Okay. Yeah. So these are your 5 possible take profit zones. That's the whole point of using Fibonacci retracement. Fibonacci retracement is just a tool that helps you predict where price is going. Okay, so you're expecting price to go to one of these levels. You don't know which level yet. You're expecting for price to go to one of this level. Once it goes to one of these levels, it's going to make a reversal at one of these levels. Okay, so you don't know which one it's going to do a reversal yet. So when it does a reversal, that's where you enter for a buy. Okay, that's where you take profit, and that's where you enter for a buy if you think price is going to reverse on one of those levels. Okay, so at this current point of time, let's see what price does. So price is moving, it's moving. Price is moving. Price has broken this first level, which is a 23.6%. Okay, so right now, sorry, you're not using, okay, right now you're trying to forecast where you think price is going to bounce off next. Okay, does that make sense? Okay, right now, let's say you already entered for a buy. You already entered for a sell now, okay? You already entered for a sell, and then there are some people who didn't enter for a sell because let's say they were busy, they went to a cafe, they went shopping, they had no time to look at the charts. Okay, so right now you missed the sell already. Now you're looking for a buy entry. So when you're looking for a buy entry, you're expecting price to bounce off one of these Fibonacci retracement levels, but you don't know which price it is, right? Okay, so let's see what price does. Oh, sorry, I'm not supposed to do that. Let me just get rid of this. Okay, let me just get rid of this. Okay, so current price is here at this current point of time. That means price has broken the 23.6 level. So my question now is, do you think price can still bounce off the 23.6 level? Seeing that price has already crossed through and broken the 23.6 level, do you think it's still possible for price to bounce off the 23.6 level? It's not possible, exactly, because price has already broken it. So the 23.6 level is actually not relevant to us anymore. So we can get rid of the 23.6 level. Okay, so now let's see what price does. Price moves. It moves. It moves. You were supposed to expect to buy from here. You're hoping, okay, it didn't work out on the 23.6 level. Maybe on the 38.2 level, I can enter for a buy here, and then maybe price will go up. Okay. Let me just get rid of the sell entry because I think it's confusing. Let's just put this as first resistance. Okay. So you think price is going to come to this level, and then it's gonna do a bounce. You wait for price to get there, and then let's see. Okay, this is a totally different topic, but there's this topic called candlesticks reversal patterns. So basically, when price comes to a key level, so all these 5 levels are actually key levels. When price comes to any of these 5 levels, if price was going to bounce from here, if there was really a sell from here, from the candlesticks pattern will come out some kind of reversal pattern, a reversal pattern like a hammer, a shooting star, a spinning top, a doji, and then you will be able to enter for a buy, right? Okay, but at this current point of time, the candle is a very strong bearish candle, which is not signifying a buy. So we're not going to enter a buy here. We're just going to see what price does. Okay, you see how that red candle actually crosses and breaks the 38.2. So are you still going to enter for a buy now that you see this red candle, is super strong bearish candle breaking the 38.2? Are you still going to enter for a buy? Okay, thank you, Glenn. Thank you, Joash. Thank you, Jessica. Thank you, Rich. You're not going to enter for a buy because clearly price is not going to reverse from here, right? So there's a chance that because you know that price is not going to reverse from here, what you want to do is now get rid of this. It's not relevant to us anymore. get rid of the 38.2, and then we're gonna see what price does. Oh, look, price actually did bounce off the 38.2 a little bit, but because we already know the end result, it did bounce off actually. Let's just put back the 38.2. It did bounce off the 38.2. It bounced off exactly on the 38.2 actually. So for scalpers, for people who scalp, they would have been able to enter here for a buy and then play this little short move. Okay, but personally, because I'm not a scalper, I'm a day trader, I would not have entered this trade. But if you are a scalper, you would have been able to enter here for a short buy. I wouldn't have entered here because this candlestick pattern did not show me that it was a reversal. Okay, so anyways, oh, why do I keep doing that? I'm so sorry, guys. Give me a sec. Let me get rid of this. Okay, anyways, for scalpers, they would have made their profit, but for day traders, for me, I would have entered the trade. Now it's trying to break. It's trying to break the 38.2. It broken the 38.2 anymore. So it's not, the 38.2 is now not relevant to us. So we'll get rid of the 38.2. We'll see what happens when it goes to the 50%. Okay, so at the 50%, it broke the 50% as well. So you wouldn't have gotten in for the buy at the 50% as well. Okay, so now you're at the 61.8%. It broke the 61.8% again. So for those who answered 61.8%, do you still think that 61.8% is still relevant? Okay, thank you, Rich. Thank you, Joash. Thank you, Jessica. Thank you, Jacob. Right, the 68.8% is not relevant anymore to the current price because price has broken the 61.8%. Therefore, we cannot use the 61.8% information to try to predict where price is going. So we're going to get rid of the 61.8%. Okay, so right now, let's just fast forward to future. Okay, right now, this is so confusing. This take profit is so confusing. Let's just get rid of that. Okay, right now, price is here. This is current time, okay? This is EURUSD on the weekly. This is current time. So price is approaching the 78.6%. So the question now is, will price, when price reaches this level, will price do a reversal here or is it gonna break through? Okay, that's the question you need to ask yourself, because when you ask yourself that question, you will be able to know if whether you're gonna be entering here for a buy or you will be entering here for a sell, right? If it does a reversal from here, you will be entering for a buy, but if it does a breakthrough, you will be entering for a sell. Okay, so how we identify whether price is going to break the 78.6% is we combine this with other things like support and resistance, trend line, let me see, support resistance, trend line, indicators, market structure, and chart patterns. But today our topic is on Fibonacci retracement. So we're just gonna focus on trying to identify Fibonacci retracement. So after we're finished with the Fibonacci series, we will be able to learn about other indicators and other trend lines and other support and resistance so that we will be able to combine Fibonacci with all the other things so that we can better predict or better forecast if price is going to break through or do a reversal. Because if it's going to break through, you're just going to enter here for a sell. If it's going to do a reversal, you can enter for a buy, and that's how you make your money from trading. Okay, are we good? Is everything clear for now? I know I see a lot of regular names and you guys must be feeling like, oh my gosh, this is such basic stuff. But it's also because there's so many beginners here today and there's so many new people here today who probably don't know much about Fibonacci. But I know like people like Harena, Yubaraj, you probably already went through my webinar on Fibonacci. So just take this as like a refresher. People like Joash, Angie, Rich, Phillips. I mean, you guys are my regulars, so you guys probably already know what I'm talking about. But yeah, just take this as a refresher. Okay, so yeah, this is how we identify Fibonacci retracement. Let's go to another example so that on your own, you guys will be able to use Fibonacci retracement as well. Let's get rid of this. Is there a particular pair you guys want to look at? Let's look at gold, maybe. I know gold is like the favorite for everyone. I see a Fibonacci retracement, but it's not like the nicest. Oh, sorry. It's not the nicest looking Fibonacci retracement, but yeah. Okay, so once we have identified our Fibonacci retracement, we're going to pull it from the swing low to the swing high. Okay. We're gonna come out with our 5 levels: 23.6, 38.2, 50%, 61.8%, and 78.6%. Okay, and then we're gonna identify which levels are most relevant to us. Okay, so do you guys think 23.6% is still relevant? Can you guys let me know in the chat box? Oh, we've got answers coming in already. So 50%. Do you see how beautiful Fibonacci retracement is? Price came up here, it did a reversal. Exactly at the 50%, it bounces off. You see it? At the 50% for this candle, it actually bounced off. So with Fibonacci retracement, you will be able to identify a lot of reversals and a lot of breakouts. This may be a silly question, but do you know if gold moves in 3 ways retracing? This may be a silly question, but do you know if gold moves in 3 ways retracing to 38.2? 38.2. Okay, honestly, I think the retracement for this pair already happened. I don't think it moves in 3 ways. It should move in 1 way. So if we're looking at this example, sorry, this is actually a bad example to use. If we're looking at this example, price actually went up, did the reversal, came to the 50%, and it already reversed. Okay, so it's probably going to continue reversing. So actually, the proper Fibonacci retracement that we should be looking at shouldn't be this big one, because it already happened. It should be this small Fibonacci retracement here. Do you see this Fibonacci retracement? Okay, so the Fibonacci retracement can work like this or this inversely. It doesn't matter how it works. Whatever way you draw it, inversely or not, you're gonna take the swing high to the swing low or the swing low to the swing high to plot your levels. Okay, so now that this is not relevant anymore, because if we take this Fibonacci retracement, price actually already came to the 50% and reversed from here. So right now, we are trying to forecast where price is going to happen from here. So we have identified our Fibonacci retracement here. We're going to grab our Fibonacci retracement tool from the swing high. We're going to pull to the swing low. Okay, right now, do you guys still think 23.6% is relevant? What happens after reversing? Edwin is asking. So after price has reversed from here, we're going to find where the next reversal is. Price already reversed from the 50%. Now we're going to find where the next reversal is. We're going to try to forecast where the next reversal is. because price doesn't just move in one straight line. Price does a lot of like reversals. So as a trader, your job is being able to identify the reversals, because when you are able to identify the reversals, you will be able to enter for a sell. You will be able to enter for a sell here or a buy here. You will be able to enter for a sell here or buy here, and that's where you make your profit in trading, and that's where you make your money. So your ability to identify reversals and breakout is actually where you make money in trading. Okay, so now that the reversal already happened, we're gonna try to predict where the next reversal is gonna happen using Fibonacci retracement and using these 5 levels. So do you guys think the 23.6% is still relevant to us? Do you think price is still able to reverse from the 23.6? Can you guys let me know in the chat box? Okay, nope. It's not relevant anymore. So we're gonna get rid of the 23.6%. Okay, do you still think the 38.2% already happened? Is still relevant to us? Okay, we've got answers coming in. Nope, nope, no, yes. Okay, this actually is another ability to use your eyes to catch this. Okay, if you guys look closely, price came down, it reversed. It actually already went to the 50%. You guys see that? Do you guys see price already went to the 50% and it already reversed? Do you see that? So price is constantly reversing at all times. Your job as a trader is being able to identify all these reversals, right? So actually, the reversal may have already happened, and oh, someone is calling me. Okay, the reversal already happened, so price already went to the 50% and it already did a reversal. Do you guys see that? I know it's like getting like more and more confusing, but yeah, you like, okay, I'm glad you guys see that. You guys see that. So now that price has already done the reversal, what you want to do is try to predict the next move price is going to do. Okay, but it's getting too small. It's getting smaller and smaller. What I think price is going to do is we're gonna zoom out a little. Let's just ignore the small moves that are happening. So if you go down to the smaller time frames, you will see price like doing a lot of reversal at all times. Okay, but because I'm a swing trader, I'm not a swing trader, I'm a day trader. Because I'm a day trader, I try to catch the bigger moves, right? I try to catch the bigger moves. So when price is doing this along the way, it doesn't bother me. What I ultimately want is when price is moving upwards. Okay, so let's go back to 4 hours. Let's try to predict where price is going on this bigger time frame. Okay, if we go down to the smaller time frame, that's already scalping, but on the bigger time frame, let's try to predict where price is going. Okay, we can agree that price has bounced off the 50%. Okay, so price came here, did the reversal and bounced off the 50%, and then it went back up. So the question now is, will it continue to shoot up, or is it gonna come back down, right? Honestly, for me, I do think that the reversal already happened. The reversal already happened. Okay, so this is when you need to combine with other things. We need to combine with trend, like momentum. You need to combine with trend, like the market trend. So let's go to the daily to see where price is going. So let's say, okay, gold is such a bad example, honestly. One look from price, right? Do you guys see that price is moving on an uptrend or a downtrend? Can you guys let me know? Oops, sorry. Can you guys let me know if you think price is moving in an uptrend or a downtrend? Up, up. Everyone's saying up. Okay, everyone is saying price is moving in an uptrend. Okay. Okay. Now let's go back to the 4 hours because we are biased that price is going in an uptrend. So your job as a trader is to find as much bias as possible. Because we are biased that price is moving in an uptrend, that means we're biased that price is doing this, right? It's moving in an uptrend. It's gonna retrace a little and then continue to move in an uptrend because our bias is up. Okay, but if our bias is down, that means price is moving in an uptrend. From here, it can do this, but it's gonna continue to go down, right? But because our bias is up, that means from here we're expecting price to move up. Okay, so because our bias is uptrend, we can safely assume that the reversal already happened at the 50%. Okay, so the price came up, did a reversal, did a slight retracement. That's why it's called retracement. It is a retracement, and from here it's gonna shoot back up. Okay, so usually what traders do is if they're biased that is on uptrend, what they're gonna do is try to look for an entry for a buy. Okay, so when price came to the 50%, there was probably a lot of traders who entered here for a buy and is now holding their buy position and like just holding their buy position and probably waiting to take profit. Okay, so that's all I have time for today. I just want to find out from you guys if that was clear, if you guys have a rough idea on Fibonacci retracement already. Is it, are you guys still lost or are you guys like good? Like, is it clearer now with Fibonacci retracement? Okay. Yeah, I think for Harana, this is just a refresher. Very informative, thankful, this is very helpful. Okay, I'm glad you guys are understanding what I'm trying to say. Okay, that's all I have time for today. So next week we're gonna do Fibonacci extension. If you guys are still not clear with Fibonacci retracement, all I can tell you guys is go on the charts and try to identify as many Fibonacci retracement, which is the V with the shorter end. Okay, V with the shorter end or V with the short. Oops, sorry, or V with the shorter end. Okay, try to identify as many Fibonacci retracements as you can. And then next week, we're going to do Fibonacci extension. And then you guys can let me know if you guys are struggling with anything. Yes, still struggling. That's okay, Edith. It's just practice. So, okay, thanks guys for attending the webinar. I'll see you guys next week. Okay, bye Baku, bye Edith, bye Brendan, Corey, Edwin, Glenn, Helena, It's, Izita, JB, Kaylee, Lorenzo, Philip, Rich, Stanley, Wilfred, Yubaraj. I will see you guys next week. Okay, bye.